Hello, ladies and gentlemen. Top of the morning to you from this part of the world, and depending on whichever part of the world you're tuning in from, good afternoon and good evening to you. Happy Friday to you all. Today is the last trading day of the week, and it promises to be another exciting session as we will be planning ourselves to capitalize on trading opportunities as a result of market participants rounding off their trading activities ahead of the weekend. I'm so excited to welcome you to the last edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategy. My own name is Sharif Daramola, and for the next 30-40 minutes, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective using the information we gather to strategically position ourselves for the next move. I'm so excited to be with you this morning, and in fact, in preparation for this session, have been able to conduct a comprehensive analysis on the assets on our watch list, and in fact I have interesting and simple trading setups that we can use to guide our trading decisions for today. So I encourage us all to stay tuned in so that you do not miss out on the valuable ideas we will be deliberating on today. And for those of you who have been with me on both my Trading View and Telegram platform, you definitely must have gotten an update as to how we are going to be managing our positions today. So we are going to be diving into the chart and see expatiating on that and see how we can position ourselves for the next move. And one thing we should also understand is that today being the last trading day of the week, we tend to see profit-taking activities happen today as market participants may want to be rounding off their trading activities ahead of the weekend, and due to this we may likely see some reversal setups moving against the prior leading price action. So we are going to be taking all of this into consideration as well. Then we also have some high impactful events, especially from the United States economic docket, which we also going to be taking into consideration while we review the current market structure. So I see your comment, Krishna, and good morning to you. Glad to have you around with us this morning. So for those of you who are joining us for the first time, I did not forget you guys. You're highly welcome on board, and I'm very excited to have you around with us this morning. And I do know that you may be wondering, what is this all about and what is it really that we are doing here? Well, the Forex Morning Mastery was born out of the necessity to do follow-up details on my weekend videos, which I usually share during the weekend in preparation for the new week. And during the Forex Morning Mastery, as technical traders, we usually gather here on Mondays, Wednesdays and Fridays to engage in follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. And my aim here is to equip you all with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach, which eventually will make you be able to enhance your own trading decisions and strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business. And as usual, the our first routine on a daily basis is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the markets today. And by looking at the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, most importantly, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So far this week, and based on the assets we have been monitoring, we shall be focusing on economic features from both the United States and the Japanese economic docket. And we've had quite a handful of impactful events so far this week, which obviously has affected price action one way or the other. But one of the key important features that we have noticed this week is how despite the resilient US economy, the dollar has been languishing in all-time lows. And one of the reasons why this is happening is basically because of the uncertainty surrounding the Federal Reserve interest rate decision for the year 2024. And if you remember vividly, during last week's trading session, we heard from the Fed chairman that it is pertinent that the Fed will cut interest rate by 75 basis points for the year 2024. So this simply means that we are going to be witnessing 3 rate cuts for this year. However, in recent times and with recent development following Fed chairman speeches during the course of this week, we were able to get hawkish comments and remarks from these officials as regards to interest rate decisions. So I'm yet to get a key major a major lowdown of what the Fed officials said. For instance, on Wednesday we had speeches from Goolsbee, we had Barr, we had Kogler, and I think yesterday we also had like 3 other speeches from Kogler, Mester, Kashkari, Barkin, and Harker, who all, from what I was able to get, is that their comments were hawkish, which further gives some glimmer of hope for buyers of the US dollar. Now, the Fed chairman spoke on Wednesday. Remember, we were looking forward to the Fed chairman's speech on Wednesday, and one of the highlights I could come up with is the fact that the Fed chairman said that for any interest rate to be cut right now, we need to see some significant figures that buttresses that inflation is easing in the United States. And from this resilient data we have been seeing here, it is not likely that interest rate is going down at all, hereby welcoming the idea that interest rate may be kept higher for an extended period of time, and this is likely going to be influencing some positive traction in favor of the US dollar. So we are going to be taking all of this into consideration. Now, fast forward to today, Friday, April 5th, we are looking forward to some bunch of high impactful event, which is likely going to be influencing the dynamics on the US dollar chart. Now, the first event we are going to be looking forward to today, hold on a second. Okay, so the first event we are going to be looking forward to today is the average hourly earnings, which is coming up in about 3 to 4 hours from now. And for those of you who do not know, the average hourly earnings represent the average amount earned per hour by private sector employees in the United States, and it's crucial. It's a crucial data to give us an insight into how healthy the labor sector is in the United States. Now, a higher average hourly earning figures are generally viewed positively by investors as they indicate wage growth and potential inflation, potentially boosting the market sentiment. Now, if we look at the previous data here, you will see that the data that came in for the month of February was about 0.1% growth, and we have market participant economists projecting a 0.3% growth for the month of March. So we are going to be looking forward to what the actual data is going to be on that one. Will it be just as expected, below expectation, or even beyond expectations? Then moving on, simultaneously as well, we will be looking forward to the almighty non-farm payroll, which is one of the major highlights for today. And of course, we all know how important the NFP is. It's considered to be a key economic indicator that measures the total number of paid US workers, excluding farm employees, government and non-profit organization employees. Now, the NFP is considered a high impact event because it provides us with insight into the overall health condition of the labor market and has a substantial impact on the market sentiment. Now, a higher than expected NFP figure is typically seen as positive, signaling economic growth, and often provide market participants with confidence in doing transaction with the US dollar. Now, if we look at the previous data for the NFP, that is for the month of February, it came in at 275,000. So we had a growth of 275,000 in the month of February. And from what is on ground right now and what market participants and economists are thinking based on their survey, they are looking at a 200,000 growth, which is quite lower than the previous data. So if this is going to be the case, then we may likely see investors restraining themselves from the dollar as the expansion, there will have been a contraction. But if this comes in beyond expectations, then we may likely see a surge in the US dollar. So it's very important for us to mark out the timing of this event so that we can be around to strategically position ourselves for the next move. And one more thing I also want to emphasize here is that the anticipation of this impactful event has a way of influencing the sentiment in the market. Now, how is that? Now, major key players in the market would obviously are going to be transacting during this time, have inner cycle within this department, and of course have an idea of what this data is going to be before the event will happen. So due to this, we may likely see them, as a result of knowing what may likely come out, build up a position ahead of this event, and this usually reflects on the chart as patterns and structures, which we want to be looking at right now to see and use them to position ourselves for the next move. So let's tune in and see what is really going on the chart. Then we also have some speeches from Logan and Pullman, which are coming up much more later in the day. They are mid-tier economy features, but they are likely going to be giving us an insight into the monetary policy outlook of the Federal Reserve and of course the economic situation in the United States. So with this information we have gathered here, let's now dive right into the business. So I've seen a lot of chats from Krishna, and I see you retracted some. Though I read some, I saw you retracted them. Probably you felt it was not necessary. So Krishna says, why are you not coming New York stream like other traders? Is coming because your teaching trading analysis is unique and 100% accurate. What do you mean by coming for the New York session live? I usually stream my live chat on the XAUUSD during the New York session. Is that what you're saying? I do that, and I usually share this link at the end of our sessions during the Forex Morning Mastery. Or is there something else you're trying to suggest? I'll really appreciate your feedbacks. So let me know and try to be precise in your explanation. And thank you very much as you do so. So with that being said, here we shall be diving right into the business. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. So let's look at what is going on this chart. So give me a moment, please. I can see that my camera is not showing. I wonder why that is. Hold on a second. Let's see if we can sort that out before. Okay, I think that is sorted. All right, so I hope you can see my face. All right, so we are back into the US All Spot chart, and in fact on the US All Spot we have done pretty well since the beginning of the week. As you will know, we have been buying this asset all the way to the upside. Now the week started on a very strong bullish note for us all, and in fact if you look at what we saw at the beginning of the week, it was quite an interesting and simple trading setup after identifying a range bound structure where we saw price action confined within the $83.15 level and the $82.60 area to emphasize the prevailing uncertainty in the market at that particular point in time. And you know how we do it whenever we have a range bound structure, which obviously emphasizes the indecision going on. We exercise patience and wait for market participants to finally make a decision, which will usually come in the form of either a breakdown of the range of the support line to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. And if you look at what happened here, a couple of hours into the New York session on Monday, we had the privilege of joining two buy positions, breakout of both the $83.15 level and the $83 area, and of course we had multiple entries to maximize the potential of this bullish move. Remember, we added more positions at the breakout of the $83.90 level. We added more positions at the breakout of the $84.80 area, and in fact, as at the first half of the week, we were doing pretty well on this asset, as we had a minimum of about let's see, 195, 170, and about 70. So we were running with over 400 pips during the first half of the week. Now during our live session on Wednesday, we begin to acknowledge the fact that the momentum for the week is very strong due to some various factors behind the scenes which has been driving the sentiment in the market. And one of these are the Ukraine-Russian war, where we saw Ukraine drones attacking Russian refineries, hereby affecting over 15% of Russians production resources. And this, obviously, we know how Russia is one of the key suppliers of oil in the global market, and this obviously dented the supply in the market. And when supply reduces, our simple economics tells us that demand will rise, and when demand rises, obviously price will soar to the upside. Then we also had the OPEC Plus ministerial meeting, which happened on Wednesday, where they decided to extend production cuts into the next quarter. And of course, we know how the OPEC Plus members have been trying to artificially increase the prices of oil. This further escalated the oil prices, and on Monday we also saw Israeli attacking the Iranian embassy in Syria, which further escalate concerns as regards to oil disruption from this particular area. The Red Sea also is there, where we saw the Houthis continue to attack oil vessels from that area, leading to a situation where oil vessels have to take a longer route to get to their destination. So all of these factors continue to support the ascent of US oil prices. And when we take all of this into the chart, we can see from a technical structure that we have a couple of ascending trend line which has been supporting the bullish idea in this market since last week Thursday. And after connecting the series of higher lows, look at what we have here. We have a couple of ascending trend line to guide our trading decisions for this week. And we went on to say that we will continue to look out for patterns and structures that support the idea of buying as long as price action remains above the ascending trend line. So on Wednesday, we continue to look out for more buying opportunities using these levels at the $85 area
and the $84.80 level. Now, this went on, though the traction wasn't really that strong on Wednesday. But if you saw my commentary yesterday morning as regards to the setup, I did emphasize that we shall continue to look out for buying opportunities, as the breakdown of the ascending trend line was not really convincing for me. Now, if you look at the breakdown of this ascending trend line, you will see that sellers were finding it difficult to settle below the structure. And if you look at the character of all of this candle following the breakdown of this ascending trend line, you will see that we have a lot of sharp rejections, giving us multiple hammer candle, which theoretically tells us that buyers are still present in the market. And due to this situation, I told us all that we shall continue to look out for patterns and structures that supports the idea of buying. So in the last 24 hours, we were able to capitalize on a minimum of 2 buy position after joining the $85 area. Remember, I shared this with you on my TradingView and Telegram platform, and then I said we will be having a buy stop order again at the $85.50 level to continue the uptrend move. And in fact, if you had done that, you must we follow through this 150 pips move on the first position and about 100 pips thereabout on the second position. And you know how we do it in this community. When price action moves significantly well in our favor, we want to be moving all our stop losses to secure some of the profits, so we do not get taken out with a sudden pullback at any point in time. And I do hope you guys moved your stop losses accordingly. If you had done so, well done. For me, I moved my stop losses before I went to bed yesterday, and as of this morning when I woke up, price has taken me out of all the positions with a minimum of about 200 pips. So I hope you guys also took advantage of that opportunity, and for those who did and stayed faithful with our analytical approach, well done and kudos to you. So at this point in time, we do not have any positions running, as we want to be looking for new trading opportunities as we prepare ourselves for the New York session today. And of course, if you had seen my commentary this morning, I did emphasize some various factors behind the scenes which obviously has been affecting the price of oil, and I did emphasize this earlier. Now, with the way things are going right now, and considering the various factors behind the scenes, and of course the fundamentals, the path of least resistance for gold prices is still looking to the upside. Now, the question as we head into the New York and London session today is, what is the path of what pattern will the price continue the uptrend? Are we going to see price do some retracement move, which may be as a result of profit-taking activity? Remember, today is the last trading day of the week, and we may likely see market participants rounding off their trading activities by taking some profits off the market, and this usually reflects on the chart as a retracement move. Now, let's look at this together and see how we intend to capitalize on the next move for today. Now, one of the things I was able to do here, after considering the character of price action in the last 48 to 60 hours, was the fact that you will see here, since Wednesday stroke Thursday's trading session, price appeared to find some series of lower highs and lower lows, which for me I consider to be a retracement move. And when you connect the series of lower highs here, you will see that we have a descending trend line. And as you will see right now, price action did break out of this descending trend line yesterday to trigger that momentum we capitalized on. And from a technical and theoretical standpoint, whenever price action breaks out of a key structure like this, we expect that some point in time price may likely come back to retest the structure in an attempt to continue the uptrend move. Though price is looking as if it's right below that ascending trend line, so we want to see how the market will react to this trend line. So the first ascending trend line, which is a thick one, has been broken to the downside. Now we can see price is oscillating around the second ascending trend line in the last couple of hours. Will this trend line be broken? If it gets broken, well, a retest of structure could incite some selling pressure back into that descending trend line in an attempt to continue the uptrend move. Now, if we look at the distance between this ascending trend line and this descending trend line here, we are looking at 150 pips move. Now, if you are a scalper, a short-term trader, or you feel comfortable taking counter trend trading opportunities, you might want to take advantage of this move right there. But personally, I wouldn't be doing that. For me, I would rather wait for price action to drop into this descending trend line, where I want to see how the market will react to that descending trend line. So if I see a form of reversal pattern here, maybe like a form of double bottom structure, head and shoulder, or a falling wedge, I will mark out the neckline and obviously join the breakout retest of the neckline to join an uptrend move. Now, if price action drops below the $84.50 level, only then will I start considering selling. But if you're a counter trend trader, a scalper, a short-term trader, you might want to capitalize on the breakdown retest of that ascending trend line. Now, if the contrary happens, that is, price does not break down the ascending trend line and it respects the ascending trend line one more time like it has been doing in the last 1 week, I have a buy stop order sitting above the highest point for this week, which is the $86.45 level, to continue the uptrend. And in fact, if price breaks out of that structure, I will be willing to join an upward momentum. And obviously, if there are new setups along the line when we continue to monitor price action, I will definitely give you updates on both my TradingView and Telegram platform. So this is my simple view on the USOILSPOT for today. I do hope I made myself very clear. But if you think that you need some further clarification or you need me to expatiate further in a particular aspect, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. You can as well take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So stay tuned, guys, and I look forward to see if there are any questions before we move on. So for my short-term traders and those who are willing to scalp a breakdown of the ascending trend line, I was able to identify another level that you can use to guide your entries, which is at the $86 area. So by the time price breaks down the $86 level, price will definitely have broken down the ascending trend line, and you may want to look out for confirmations on lower time frame like a retest of structure, continued selling pressure before jumping into that position, while your stop losses may be somewhere around the $85 area and the $84 level, dovetailing to about 150 pips thereabout. So let's see how the market will play out, and in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So stay tuned in, guys. So the next asset we are going to be looking at today is going to be the USDJPY, and right here on the USDJPY we have an interesting and uncertain market condition. As you will see, the week has been laced with choppy trading activities. So we've had roller coasters of buys, sells, buys, and lately we sold again during yesterday's trading session before the bullish momentum began all over again. And of course, we do know why this is happening. As we all know, there is this uncertainty going on in the market where majority have been taking short-term trading opportunities due to the fear that Bank of Japan may likely intervene in this market. And in the last couple of weeks, the officials of Bank of Japan and policymakers have continued to reiterate the need to intervene in the FX market if the value of the Japanese yen continue to decline. And this is one of the major reasons why we've seen market continue to move within a range since the beginning of the week. Now let's look at what really happened on Monday and what led to our decisions for educational purposes, and let's see how we have been trading the USDJPY since the beginning of the week. Now remember, at the beginning of the week, for those of us who saw who are part of our session, and in fact if you missed out on our top-down analysis, you might want to check the link right in the description box below so you can see how we came from the higher time frame right all the way to our execution time frame. Remember, I only take on the 1 hour time frame, which is our execution time frame. So at the beginning of the week, we had this range bound structure where price was confined within the 151.435 and the 151.225 area to emphasize the prevailing uncertainty in this market. And you know how we treat our range bound structure, which emphasize the indecision going on. We exercise patience and wait for price action to either break down the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, at no point in time did we see price come even close to our support line, which emphasized the fact that price has a tendency of going to the upside. So by positioning ourselves around the resistance line at the 151.435, we had the privilege of joining an uptrend move. Then I think we added one more positions along the line had the breakout of the 151.600, though the momentum did not last long, as we were able to scoop in about 20 pips on that particular one. Then on Tuesday we had an opportunity of selling, though we were taking out in a stop loss on that one. And then I did mention here on Wednesday that if price comes back to retest the 151.600, which interestingly shares a beautiful confluence with that ascending trend line that has been supporting that momentum in the last couple of weeks, we shall be buying again. And I did mark out multiple levels for those of you who are with me on both my TradingView and Telegram platform. We joined the momentum all the way into the 151.925 And of course, you see, as soon as price got into that level, we saw bearish traction come over again, pushing price to the downside. We were able to take about 20 pips on that one too as well. And then we had this whole situation yesterday. For those of you who saw my commentary on the USDJPY for our Thursday session, I did emphasize that this ascending trend line is going to be playing a major role, and that if we see a situation where the ascending trend line is broken to the downside and breaking down the 151.600 area, we shall be selling the USDJPY. Then we also had multiple levels to maximize the potential of this bearish move. We had the 151.435, and of course we also had our key level at the 151.200 area. And in fact, we were able to see a significant move, especially during the Asian session, as we saw price move over 75 pips on the first sell position. We saw the second sell position move about 60 pips, that's about 130, and the third one moved about 37 pips thereabout. So we were looking at about a minimum of 100 pips after moving our stop losses accordingly and taking out of all the sell positions. So this morning, while I was giving you an update in this market, I told us all that we may likely be seeing a reversal setup come up today. Now the new reversal setup we're seeing here may be attributed to a risk-off sentiment and intervention fears failing to maintain the status of the Japanese yen. Now overnight we had hawkish comments from Federal Reserve officials, which of course have bolstered the US dollar across board and contributed to the rebound of the USDJPY. Now the decline can be attributed to continued US dollar buying following the overnight statement by the Fed officials, and additionally speculation regarding potential intervention by Japanese authority may stabilize this currency. So we are not going to be getting too excited about this whole situation. The current market condition is still very imbalanced, as market participants are divided by the idea that there will be an intervention, and the other aspects are thinking that interest rate will be maintained higher for an extended period of time due to the resilient nature of the US economy. So we need to be very, very cautious and wait for significant confirmations before jumping into any sell position or buy position from here. Now, looking at what has happened here in the last 12-16 hours, I'm beginning to see what may look like a reversal setup. Looking at this impulsive move to the downside, and then you see this looking like this, which is looking like the head of a inverse head and shoulder pattern, where this whole situation could give us a theoretical reversal pattern in the form of an inverse head and shoulder pattern. So if you look at my commentary this morning, I did identify the 151.350 area, which could be serving as the neckline of that reversal pattern. And if you saw my commentary, I mentioned that we will need some significant confirmation before jumping into any positions, like a breakout retest of structure. So what we are looking at is a breakout and retest. A breakout has already happened. A retest could be a beautiful opportunity to join that uptrend move, and in fact we have multiple levels that we can use to maximize that move. We have the 151.453, we have the 151.600, and of course the 151.750 area to maximize the potential of this bullish move. Now, while we are joining this bullish momentum, we do want to take into consideration the fact that price action is still trading below that descending trend line that was broken yesterday. So this descending trend line right here. Now, from a theoretical standpoint, whenever price action breaks down a descending trend line, we expect that at some point price may likely come back, retest the structure in an attempt to continue the downtrend move. So what I'm simply saying here is that for those of us who are buying the breakout of the 151.350, as soon as price action comes close to this ascending trend line, let's ensure that we move all our stop losses to secure some profit, and then let's see how the market will react to that structure. Now, if price gets into this area and we begin to see continued selling pressure or an evolution into a reversal pattern, then we'll have no other choice to mark out the neckline and then join the decline to the downside. However, if price action chooses to break out of the ascending trend line, retest of structure will be a beautiful confirmation for us to continue the uptrend. So I would like us to mark out these levels accordingly and trend line on our chart, as we will be needing them as a reference point to guide our independent trading decisions today. But trust me, I will always be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. However, if price action does the opposite and does not continue to the upside, then a breakdown of our key level at the 151.200 will be confirming the downtrend continuation, and we will like to join a bearish move to the downside. Then a further breakdown of the lowest point for this week, which is exactly at the 150.900, will be welcoming more selling opportunities for us. So I do encourage us all to mark out this level, as we shall be using them to guide our trading decisions for today. So this is my simple view on the USDJPY. So let's see how the market is going to play out going forward. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the final assets on our watch list for this week. Stay tuned in and use that time to mark out these levels accordingly on your chart. So I see your comment, Crasta at Ken. Good morning to you, Crasta Ken. Trust you're doing well. This is my first time seeing you here on the Forex Morning Mastery. Trust you're doing very well out there. So you are asking here that you want us to treat Euro USD analysis. Unfortunately, we do not have the Euro USD on our watch list for this week. We have been monitoring the USOILSPOT, the USDJPY, and the XAUUSD for this week, and so I wouldn't be able to take on the Euro USD. And another thing is, I have limited time. In the next 10, 15, 20 minutes I will be having another session and I wouldn't be able to take it, so please bear with me on that one. Let's see, probably next week we could take on the Euro USD in our watch list. I may likely drop a poll on both my Trading View, on my Telegram and YouTube platform to see what my viewers are going to be, what members of the community will prefer for the next week. So I hope you will be around. I hope you subscribe to the channel so that you can receive that poll and vote for whichever preference you want to choose. So I'm sorry about that, and I do hope you understand. So with that being said here, and in the absence of no questions, I want to assume that we are all on the same page. In that regard, let's move right into the final asset on our watch list. Crasta Kent says, you take one-to-one mentor? Of course, yes, I do take a one-to-one mentorship program, but it's for a limited space. Due to the fact that it's a one-to-one, it's not a course outline. I have a limited number of people that I work with in that regard, but you can send me an email. Let's see Let's see how we can work together. My email is scrolling right at the bottom of your screen right now, or you may probably you can check the description box below. Contact me and let's see how we can work together. All right, Craster Ken, I look forward to your email. All right, so in the absence of no further questions, let's move right into the final asset on our watch list for today. So the final asset we are going to be looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And I can say here confidently that the XAUUSD happens to be the most profitable asset on our watch list for this week, as we were able to ride that bullish momentum into the all-time high record at the 2,300-ish area, giving us some significant amount of profit for this week. Now, for educational purposes and the sake of those who missed out on our earlier editions, let's quickly run through what really happened at the beginning of the week. Now, remember, for those of you who are with me, we had this situation where price rose significantly during the first 6 hours of the week, where we saw price started at around the $2,235.50 level and then rose into that $2,265.50 area. Now, during our live session on Monday, I did emphasize that due to the fact that price action was at an all-time high back then, we may likely see some choppy market conditions, retracement move, or even consolidation phase due to fear of market participants going into the market to take some profit, because when price finds a new high, it usually takes some time before price action acclimatizes to that area. Now, the fact that the current high has no correlation with the past, price has never gotten into this level, we may see a lot of market participants start taking some profit, leading into some retracement move, consolidation phases, or choppy market conditions. Now, due to this idea, we were saying that if price action breaks down, retest the 2,257 level, we shall be selling. And we were able to identify the structure on the 15 minutes time frame after identifying a reversal pattern here, where the 2,257 level was serving as a neckline of that reversal pattern. So we saw price action break down that 2,257 level, and then I did mention that for those of us who missed out on that opportunity, let's wait and see if the market will give us a second chance at a retest of structure. So with a sell limit order at the retest of structure, we were able to continue this move to the downside, scooping in over 240 pips with that short move to the downside. Then afterwards, we begin to see buy pressure resume around the 2,235, and after monitoring it for about 12 to 16 hours, remember, we were not keen on just jumping into a buy position due to the sensitivity of this area where price action is, which is an all-time high. So we needed some significant confirmations to guide our move. So we were saying here that if the neckline at the 2,257 level is broken, and considering the fact that price was finding a series of higher lows, we shall be joining that uptrend move. So we positioned ourselves at the breakout of the $2,257 area, and then we saw market came back, retest the structure, and lo and behold, price action continued to find momentum, continuing to the upside, and we were lucky enough to maximize this move by adding more positions at the breakout of the 2,265 level. We added more at the breakout of the 2,275 area before this bearish momentum came in, and of course we moved our stop losses accordingly. So we were taking out with some I think we were able to take about 200 pips on that bullish momentum we had there. Now, during our live session on Wednesday and during my commentary on Wednesday, I said that this ascending trend line will continue to guide our momentum, and that if the appearance or emergence of a reversal pattern around this area comes up, we will be adding more buy positions. Now, we saw the situation here. As soon as price got into that area between the $2,270 and the $2,274, we saw the nature of this candle giving us hammer candles consecutively, further emphasizing the strength of the buyers around that area. So we were able to continue the momentum to the upside, breaking out of the 2,274 level. We added more at the 2,276. Then we added another one at the breakout of the $2,286.50 level, and of course the 2,295 area. So we were able to make another 300 pips thereabout on that one before the bearish momentum came in. Now, during our Thursday's trading session, I was beginning to suspect that we may likely be seeing a bearish move at this point. So as a result of this, I did say that we will be selling here. That was yesterday, that we will be selling the breakdown retest of the 2,295, which of course we did, and price moved about how many pips thereabout? I think it moved about 120 pips, and I do hope you moved your stop losses accordingly. If you did so, well done to you, as you must have been taken out with some reasonable amount of profit, or a worst case scenario break even, depending on where you moved your stop losses to. So following this takeout here, I wasn't able to take any positions here because the market was so choppy, and I didn't give any update following that. And the reason why I did not give any update was because of the uncertainty surrounding this current market structure. And in fact, when I woke up this morning, I saw this old bearish momentum to the downside, and this was as a result of the hawkish remark by the Federal Reserve officials over the night, which of course influenced the rebound of the US dollar. Now, the question as we head into the London and New York session today is, will this rebound continue in the sense that price may drop to the downside, or will this just be a false breakdown where price may still have a chance of continue the uptrend? And in fact, if you look at what has happened in the last 6 hours, you can see the momentum has been strong to the upside. Now, to guide our trading decisions for today, I have a simple structure here, which comes in the form of a descending trend line after connecting the series of lower highs in the last 24 hours. Now, this descending trend line is going to be a key factor in guiding our trading decisions for today. And you know how we use our trend lines in this community, especially the descending trend line. As long as price remains below the descending trend line, we shall continue to look out for patterns and structures that supports the idea of selling this asset. Now, we also want to take into consideration a lot of factors behind the scenes, which is influencing the way market participants are behaving in this market. Now, remember, we have the geopolitical tensions stemming from the ongoing conflict from Russia-Ukraine war, and of course the potential escalation in the Middle East, that is the Israel Gaza situation, and lately we had the Israel striking the Iranian embassy in Syria, and of course the Iran leader 2 days ago or yesterday emphasized that he's going to, using his own words, slap the Israeli government in that regard. So this whole situation is escalating, and everyone is thinking that probably in the next 48 hours we may see a retaliation attack from the Iranian government. Now, this kind of geopolitical tension usually influence the appeal for safe haven assets such as the gold. Now, with this factor here, and considering the uncertainty surrounding the Federal Reserve interest rate decision for this year, considering the resilient US economy, the path of least resistance for gold is still looking to the upside. So, guiding our trading decisions for today, we are going to be using this descending trend line today. Now, let me zoom out so we can see things clearly, as this is where our center of focus will be. Now, look at this. We have our descending trend line sharing a beautiful confluence with the $2,286.50 level. Now, what I'm looking out for here is to see how the market is going to be reacting to this confluence. And if you look at what has been happening here in the last 3 hours, you will see that price action has been oscillating around that area where we do not know what is going to happen at this point. But what are the things we are going to be looking out for? Now, the first one is, considering the descending trend line, let's look at the possibilities of a bearish momentum. Now, what are we likely to see here before joining a bearish move? Well, I would like to see a reversal pattern around this area. It will come in the form of a double top structure, head and shoulder pattern, or even a rising wedge, where as soon as we identify this possibility, we mark out the neckline of that reversal pattern, and of course sell the breakdown retest of that reversal pattern to join the bearish momentum to the downside. And in fact, we have multiple levels to maximize the bearish move, like the $2,277 level, and of course the $2,271.50 area to add more sell positions to our existing trade. So we are only going to be selling if we see any form of reversal pattern around that confluence at the descending trend line and the $2,286.50 level. Now, if the contrary happens here, considering the various factors which obviously influence the appeal for safe haven, a breakout retest of that descending trend line will be all we need to continue the uptrend move. So if price continues to stay above both the descending trend line and that's $2,086.50 level, we shall be looking out for more buying opportunities in this market. And in fact, I do have a buy stop order sitting above the $2,229 level, $2,295 level, sorry, and then the highest point here at the $2,302 area to maximize the potential of this bullish move. So I already have a buy stop order at this area, so let's see how far this momentum will go. So our center of focus today is basically around this confluence at the trend line and that $2,286.50 area. So let's see what will happen around this area, and this will inform our decisions for today. But trust me, I will be with you in the comment section. Have both my TradingView and Telegram platforms to give you updates as at when due. And remember, the XAUUSD live session is going to be holding today. The links after the end of the session, by the time the session ends, you will see the link to the XAUUSD live window, where you can actually click on the link, click on the notify me button, and you can get notified as soon as we come on live. So the XAUUSD live window is a platform born out of popular demand from members of this community, where we come to monitor real-time price action on the XAUUSD during the New York session. So it usually kickstart about 5 to 10 minutes into the New York session, 5-10 minutes into the New York session, and it lasts about 5 to 7 hours depending on the volume of trading on that on that particular day. So let's see how we are going to be managing our positions on this asset for today, and I look forward to seeing you guys in the comment section of that session. So this is where we are going to be ending today's Forex Morning Mastery. But before I round off the session, I would like to know if there are any questions regarding my explanation so far. And if you have any questions, feel free to drop them in the comment section, and try to mark out these levels accordingly, as they are going to be playing a major role in determining how we are going to be managing our positions for today. And if you have found this content helpful and useful in making your independent trading decision, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and of course it helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. So let's see if there are any questions. So I will take the next 5-10 seconds off, and then we shall be rounding off the session in due time. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be rounding off. We have come to the end of today's Forex Morning Mastery, and it has been a wonderful moment with you guys. I really appreciate. For those of you who had clicked on the like button, you guys are wonderful. Thank you very much for the support and helping this community to grow. So we were able to take on 3 financial assets which we have been monitoring since the beginning of the week, which includes the USOILSPOT, the USDJPY, and of course my favorite amongst them all, the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns only to unravel the potential trajectory of price action today. So I hope you all marked out these levels accordingly on your chart, as we shall be needing them as a reference point to guide our independent trading decisions for today. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, let's ensure we have a well-defined risk management strategy in place. And for those of you who are joining us for the first time today, I'm glad to have you around with us this morning, and I hope you were able to gain 1 or 2 things from what we discussed during the course of the session. And if you did, you want to be part of our subsequent editions, as I look forward to seeing more of you same time on Monday morning, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well this is doing, and of course prepare ourselves for the new week. And remember, I will be sharing a couple of videos during the course of the weekend in preparation of the new week. And of course, it's going to be a foundation for Monday's Forex Morning Mastery. So if you are yet to subscribe to the channel, please do, so that you don't miss out on this content whenever I share them. I see your comment, Krishna, and thank you. I see you, Krasta Ken. You retracted your messages, but no problem. It's okay. You guys are wonderful. Thank you for being around, and I look forward to seeing you all in the comment section of both my TradingView and Telegram platform, and of course during the XAUUSD live window later today as we continue to monitor price action. So on this note, I want to wish us all the best of luck. Do have a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.